Thank you, Jan. That was funny. That was very funny. All right, so let me go to the next question, and then I want to mention something else I was thinking about this morning. Um, okay, so let's see here. Jan asks, "What's being done to allow students to speak audibly during class to ask questions?" You know what? I found out that I can actually hit a button to give you a chance to speak. So maybe next week we can try that. This week, I'd rather stick to what we're doing in terms of the current approach, but next week we can definitely try that. All right. So one thing I want to mention also that I was processing was uh, there's um there's a guy who wrote a book, and I don't remember the guy's name, but he was on a podcast I was watching, and he was talking about all the celebrities that were pushing bad crypto just 1 year ago. They called it the Crypto Bowl. And does anybody remember how many crypto ads there were in the last Super Bowl? Not this one, but the previous one. There were a ton of crypto ads, and some of them by companies like eToro, Coinbase. What's another one? FTX, of course. FTX had some of the biggest ads out there. And right now, people like LeBron James are getting a lot of scrutiny because remember, LeBron was in an eToro ad, and what he was doing was he was talking to his old self. They digitally imposed, I guess a young version of LeBron, where the old LeBron's talking to the young LeBron, and he's basically talking to him and saying, if you want something, you got to go for it, and you can't hold back. You got to just give it your all and go for it. And one of the things that the experts talked about was how this ad was designed specifically to manipulate certain people, and he mentioned African Americans. It was a white guy. He specifically mentioned African Americans, and he said that because there was another Spike Lee had another commercial just like that. He said that, and I didn't know this. I could have guessed this, but I didn't realize it. He said African Americans were more likely to invest in crypto than other groups because we don't necessarily have the financial literacy that might match other groups, and also we tend to sort of see alternative investments as that big break, that big opportunity, almost like how you have 10 million black boys all trying to get into the NBA, even though 9.999 million of them are not going to make it to the NBA, but all of them will bet it all. They bet their lives on the NBA, and that's a mindset. When I used to work with Damon Dash a lot, one area where Damon and I didn't agree. He's a smart guy, and I like him. He's a good friend. But one thing I did not agree with him on was he would talk about investing, and he would use terms like bet it all. He said, when I invest, I bet it all. I bet it all. And I said, well, when I invest, I don't want to bet it all. Like, that's not a smart way to invest. That's a good way to go broke and have financial problems your whole life. And then also, even if you're successful, I don't think it's necessary to live with a boom bust mentality when it comes to wealth building. It doesn't have to be traumatic. It doesn't have to be chaotic. It can be very consistent and steady. There's a book by David Bach called The Automatic Millionaire, where he talks about regular people who have regular jobs who become millionaires by investing in a regular and consistent way. There's no drama, no chaos, no big chances, no penitentiary chances. Then nobody gets shot. Nobody made it to the NBA. They just invested consistently in an S&P 500 index fund, and then by the time they hit a certain age, they got $1 million in the bank. And it's not like the million appears overnight. They've been financially secure for 20, 30 years. They were financially secure by the age of 28 because they were between 18 and 28. They were consistently investing, and by 28, they had more money than most other 28-year-olds. So it's not like they had to wait till they were retirement age to see the economic benefits of consistent investing. So to go back to what happened with crypto, a lot of people, a lot of these celebrities are being sued. I don't know if LeBron's being named in any of these lawsuits. I know that Tom Brady has some problems because he was deeply connected to FTX. Some other celebs, they were out. The Kardashians, I think Kim Kardashian had to pay a $1 million fine. And also they talked about something that was interesting that is used heavily against Black people. They call this affinity bias. Affinity bias is where you are biased in terms of doing things that are consistent with people that you have affinity for. Studies show that Black people look up to celebrities more than other groups do. Jewish people don't look up to celebrities the way we do. White people don't look up to celebrities the way we do. Asian people don't look up to celebrities the way we do. Even African people don't think celebrities are better than teachers and scientists and things like that. We love celebrities. So what the crypto thing did was they said, okay, African Americans are heavily invested in crypto. We with the, they sort of believe these myths that they throw out there, like what was it something success favors the bold, right? And so a lot of these ads, so what they would do is they put a black man like a LeBron on an ad, and they'll have him giving a pep talk to himself, like, you can't be scared, you got to go for it, blah blah blah. So we get pumped up, and the affinity bias kicks in because LeBron is saying these things, and next thing you know, we're going out and we're buying crypto. The other thing that they mentioned that was really interesting, and this was in the Wall Street Journal podcast, the guy, I don't remember the guy's name who wrote this book. I got to look it up. But he also said that African Americans weren't just more likely to buy crypto, we're more likely to invest in really bad things. Like, we're more likely to go after a penny stock because our homeboy told us in the barbershop that that the stock was only $1.98. And you start doing the math and you say, gosh, if that $1.98 goes up to $7 or $12, look at how much money I'm going to make. And those investments just tend to go bad. In fact, one of you asked me about some of your investments, and I saw that the bulk of your portfolio was actually Dogecoin. And I'm not here to tell you that. Now, by the way, can you all hear me? Give me a yes if you can hear me. Tina says no sound. Are you all able to hear me still? Let me know if you can hear me. Okay, I see a lot of yeses. Okay, good. All right. So I thought, okay, sorry, Tina. I wish I could help, but you might want to check your system. Okay. But yeah, so you know, I just want to sort of let you guys know that bias does exist. And there's nothing about a celebrity that should make you invest in a financial asset. There is no celebrity that I know of who knows, you know, who has a doctorate in finance or who has an MBA even. I'm not saying that they're stupid. I'm not saying none of them know anything. But if you're looking for expertise from LeBron, then it seems like you would ask him about basketball, right? Or maybe you could ask him about the business of basketball. He's done a good job. So he's not a stupid guy. He's not a financial expert. He's not a person that can tell you if a stock or a crypto is any good. Neither is a Kim Kardashian or a Mary J. Blige or whoever else it is. And I'm warning you about this because what's going to happen is once all this is behind us and once these markets start taking off again, they're going to go back to the same playbook. The same people they get you to go vote for a certain politician without doing your own research. They're going to try to get you to invest in cryptocurrencies without doing any research. And they're also going to lean on this sort of catchy gospel rhetoric, the kind of stuff they do in a church, to get you to really believe in it. So they'll use certain language. And I remember hearing a guy, he was basically pushing a Ponzi scheme. He was pushing one of those blessing looms. And all of his rhetoric was very laced within Black power culture. He's like, we got to do this for our community. Come on. He used the word family, like, come on, family. We got to come together, family, to make this happen for our community, blah, 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 blah. And he was trying to get everybody to invest in a Ponzi scheme. So I encourage you just to kind of look out for that. I would lean toward, if you're not sure about something and you're going to invest in it, I wouldn't put too much of my money into any one thing. There is no one investment that's just going to flip for you overnight. The closest thing I've seen to fast flips might be, I told you guys earlier, this year, 2023, is going to be a hell of a year, in my opinion. I believe 2023, I spent all of 2022 getting ready for what I'm seeing right now. I'm not saying that it's going to happen soon or later. I'm not saying that I'm 100% correct. I could be wrong, but literally all through 2022, I held my nose and I was buying all these stocks that were beaten down like crazy, because I know that the sun is going to rise again. So there are signs that the sun is actually making a comeback. And I encourage you to make them move early, because what's going to happen is all your friends that are not listening to stuff like this now, they're going to all be pouring back into the market as soon as it hits the headlines. As soon as they see, USA Today, stock market hits a record high, or as soon as they see you driving a new car because you came into some money, they're going to start trying to invest themselves. But the problem is they're going to be late for the party. That's what the stock market does, though. The stock market is a wealth transfer vehicle. It transfers wealth from impatient people to patient people. It transfers wealth from uninformed people to informed people. It transfers wealth from the late bloomers to the early adopters, right? So I want you to be an early adopter. I want you to be informed, and I need you to be patient. I don't want you looking into these get rich quick schemes unless you are clear about what you're getting. It's like, again, I compare it to like a one night stand. I'm not here to tell you that a one night stand isn't for you. If that's your thing, then go for it. Just make sure you know what it is. Make sure you know that a one night stand is not the same as getting married and raising a family. Those are two separate categories. So those get rich quick investments, those fast hitch penny stocks, scarce cryptos that are just launched or whatever, that's just a whole different type of investment. And some of those things actually do turn out to do pretty well. So maybe if you want to speculate on a Dogecoin, go for it. I'm not going to get mad at you for owning a little bit of Dogecoin. But if you're looking at Dogecoin as your big opportunity, then we might have to have a talk. Okay. So let me answer a few more of your questions. Jimmy's asking about drboyceinvestmentclub.com. Yeah, if you want to go there and join, you can. Just go to the drboyceinvestmentclub.com. It's right there. And if you have something, part of the club is that you do get a chance to promote your business, things like that. So if you're in there and you have something you want to promote, just email support@theblackbusinessschool.com. That's support@theblackbusinessschool.com, and they can help you get whatever you need. Okay. Damon says, I submitted another question earlier this week. I want to begin a custodial account for my niece and nephew. Would you suggest a custodial account or a trust account? I don't suggest. I'm not a big fan of custodial accounts because I'm not a big believer in giving children control of large amounts of money, because I don't think they're in a position yet to make good decisions. I think a trust is better, or at least some assets that you control. Trusts are nice in the sense that they are legal entities themselves. They separate you from your assets. So if somebody sues you, that doesn't necessarily mean they get access to the resources that are in your trust. Also, a trust can execute itself and take care of people after you're gone based on your specific instructions. I think everybody should have a trust. Everybody, if you want to protect your assets, I think trusts are a great way to go. So they have trust attorneys out here that are very good. I talked to a trust attorney one time who told me that she said her whole office makes all of its money off of people who are not prepared. That goes back to what I was telling you earlier when I was telling you that wealth is a transfer from impatient people to patient people. One other transfer is that wealth is a transfer from the unprepared to the prepared. So people who are always a day late and a dollar short are going to end up giving their wealth away to the people that are ready to collect their money. People who are reactionary end up giving their wealth away to people who are proactionary. So basically what she said was that her whole law office makes millions of dollars every year because families don't prepare for death. And then when they don't prepare for death, their assets get put into probate court, where everybody, literally like a bunch of vultures, get to go in and they get to eat off your assets. They get to go take a piece of Big Mama's house. They get to take the money out of the retirement account. They get to take a bunch of your assets that you have in the bank or whatever that were supposed to go to the kids, but they're not going to the kids because these entities that are coming in and sorting through the mess you left behind are going to expect to be compensated for sorting through that mess. That's why Prince, I believe, paid between $70 and $100 million of his wealth to people he doesn't even know. He spent his whole life fighting against racism and white supremacy, but he donated almost $100 million to the same racist institutions that he fought against his whole entire life. Why? Well, because he did not prepare. And so ultimately, I encourage you to sort of think these things through, have those hard conversations. It's not fun, it's not easy, but it's something that you have to do. Unless you want to give everything away. If you want to do that, then that's up to you. Let's see. Damon says, hello, I had a question regarding use of margin and options. First, are these related in any way? Margin and options are related in one particular way. Both of them create what is called leverage. Leverage is basically risk. It's like a slingshot. If you, with a slingshot, the further you pull it back, the farther it's going to go when you finally let it loose. Or like a seesaw, right? A seesaw means, if it's a big seesaw with a big pendulum in the middle, that means either you're way, way up or you're way, way down. Leverage does that. Leverage kind of creates like a lot of volatility in your life. So options and margin can both create leverage, just in very different ways. With options, again, we talked about options a little bit earlier. Options basically allow you to uh, calibrate and manage the risk on your portfolio. It might allow you to invest in the stock without having to come up with all the money. It might allow you to protect your position with a stock. I think options are awesome. I like options more than I like stock. Again, stockoptionsmasterclass.com if you want to go into the options masterclass, or you can also go to boycewatkins.com where I have that lecture, How to Make Money Without Working. That's all about selling stock options. I love options. I love them more on the sell side than the buy side, but that's not because the buy side is worse than the sell side. It's a preference. It's a preference based on how I feel, how I think, the fact that I'm a grown man with a family, the fact that I'm more concerned with protecting my resources than I am in increasing my resources, right? Maybe when I was younger, maybe my preferences would have been different, right? Just like when you talk about food or exercise or something, when you were a kid, you might have worked out differently than you do as an adult. As a 51-year-old man, when I go to the gym, I don't do the same things I would have done when I was 25 years old. So the way you invest also evolves through time based on what you're trying to accomplish or what you're trying to protect. So I like the sell side of options because I want to generate income. I'm not trying to look for something that's going to make me rich overnight. I'm looking for things that are going to allow me to have the income so that I can just continue to maintain the life that I have or whatever, right? But the buy side is also very interesting. There are all kinds of interesting strategies you can participate in with options that will allow you to be a more fully functional participant in markets. So again, that free lecture is at boycewatkins.com, How to Make Money Without Working. The Stock Options Masterclass is at stockoptionsmasterclass.com. Now, margin is basically debt. Margin is where if you go into a lot of these apps, they will allow you to buy more stock than you can actually afford. So you can actually participate a little bit more in the investment. The good side of margin is that debt is a good thing when it's used properly. Don't let Dave Ramsey or anybody tell you that debt is always bad. That's simply not true. You're not always better off if you're debt free. A person who has good investment opportunities should not be debt free. They should have as much debt as they can possibly get. Not as much as they can possibly get, but you want debt because that allows you to leverage what you're doing. That allows you to expand and multiply what you're doing if you know what you're doing. So Elon Musk, the number one goal that Elon Musk had when he sold his company to PayPal or whatever, or he sold PayPal to another company. I don't remember what it was. I think he created PayPal. I think that was when he first made his first 100 million. And so he spent all this money trying to create Tesla and SpaceX. He had this crazy dream of wanting to make electric cars and also go to Mars and build rocket ships. He couldn't build rocket ships with $100 million. You can't make electric cars with $100 million. He spent a lot of his energy trying to get debt. He needed investors. He needed a few $1 billion to be able to scale up what he was trying to do. And so ultimately, the biggest thing that happened to Musk was he almost ran out of money entirely. And then at the very last minute, some investors came through and he was able to make payroll and keep his company going. Had that not occurred, Elon Musk wouldn't have become a multi-billionaire. He would have gone bankrupt. This is why access to debt and access to capital is so important for Black people. In fact, if I could change any government policy, I would make a policy that says every Black business owner gets preferential treatment on bank loans. That any Black person with a good business idea should be able to, out of the gate, get $250,000 to execute that business plan. And that would make a huge difference in terms of family outcomes. All right, so let's see. Next question is, I'm reading the questions you guys submitted in advance. If you log in at theblackstockmarketprogram.com, you can leave your question in advance. There's a lot of them, so I have to go through them all. And I promise you guys I go through your questions first. So some of you may have questions in the chat. And if I don't see them yet, it's because I'm looking at a different screen here. All right, so Randall says, now I want to figure out what to do with the current stock crypto I have. I put 265 in Amazon, Brinker International, PayPal, Young Money, Walt Disney, Uncle Sam. Let's see. If I pull out, I'll get $69, $200 in Dogecoin, $37 now, $500 in UWMC. Pretty sure it's negative. Okay. All right. So, right now is not, in my view, a good time. Like, I'm not selling a whole lot right now. The only thing I might sell are things that are just really bad, the dogs. You have a couple of stocks that I own. I own Amazon. I'm holding that forever. I'm adding to it every week. PayPal, I add to that as much as I can. In Disney, I believe in Disney long term. Disney's had a downturn, but I think eventually Disney's going to get back to the business of making money, and that's something I really believe in. And so So I don't think the portfolio is bad. I would say my question for you would be, out of the money that you make every week, doing whatever it is you do to make money, are you putting some percentage of that money consistently in your investments, and then also are you adequately diversified? I'm not a big fan of hyper risky stuff, but there are some stocks. Again, if you log in at the blackstockmarketprogram.com, there are. If you look under what Dr. Boyce is buying, in that section, all those stocks that I pick for you guys are stocks that I'm putting my money into, right? And literally, this is where I'm putting my own family's money. So, again, I can't guarantee anything. Nobody can predict what a stock does. I don't care what anybody tells you. But these are the best investments that I can possibly find, and I share these with you guys every week. So if you want to just follow along with that, you can. Just look for what Dr. Boyce is buying. If you ever get stuck and you can't find something, just email our support team, support at theblackbusinessschool.com, support at theblackbusinessschool.com. Those of you who are in the Prime program, you have access to a lot of that stuff. Make sure you use that. You don't have to figure it out on your own. All that stuff is available for you. Let's see here. Dr. Boyce, what do you think about the dividend mutual fund?